In the midst of its bankruptcy problems, cryptocurrency lender Celsius is nevertheless under increased regulatory scrutiny. The circumstances surrounding the company's demise were called into question on Wednesday, including claims that it misled investors about its financial difficulties. Even if a former manager is still being accused of losing millions of dollars, the most recent news broke. Specifics from the document. According to a publicly available court document filed on September 7, 2022, Celsius may have concealed its financial issues from its investors and engaged in the illegal manipulation of the price of the platform's token in order to strengthen the firm's balance sheet and finances. The filing was made by regulators from the Vermont Department of Financial Regulation in support of the United States trustee's request for the appointment of an impartial examiner. This is due to a previous statement made by the trustee looking into Celsius's bankruptcy case that they are looking for an examiner to help them gather new facts and remove confusion and worry. According to recent court documents, a preliminary analysis of financial data shows that the crypto lending company had huge losses in the first 7 months of 2021 and two substantial adverse events in June and July of that year. The company kept its financial losses a secret from investors, despite the fact that state and federal securities rules require the firm to disclose its financial statements. Additionally, Celsius is charged of manipulating the value of its Cell coin. The transactions may have artificially raised the company's Cell holdings on its balance sheet, according to the document. The firm never earned enough income to maintain the yields being provided to investors, according to the lawsuit. The most recent Celsius filing from yesterday, however, stated that it was clear that Celsius, through its CEO Alex Mashinsky and other employees, made false and misleading claims to investors about, among other things, the company's financial health and its compliance with securities laws as a result of the multi-state investigation. Despite worries about the market's volatility, both of which likely drove retail investors to invest in Celsius or to leave their stakes in Celsius, concerns about Celsius's business model are growing. The business model, operations, investments, and lending activities of the company must be investigated by an impartial examiner. This is so that an examiner may assess Celsius's management's part in contributing to the debtor's existing illiquidity and any irregularities, as stated in the statement. More than 300 customers have written letters to the company since it filed for bankruptcy on July 13. Some of these customers allege they were duped and are asking for their money back. A lawyer for Celsius claimed on Tuesday that the company had received more funding to help with its restructuring. Celsius subsequently declared that it will be working expeditiously on the next steps and will be meeting with a committee that represents unsecured creditors the following week. The filing also stated that any ambiguities surrounding the situation that might have resulted from social media might be cleared up by an examiner. Added claims to strengthen its balance sheet, Celsius manipulated the Cell token. The regulators' suspicions about Celsius may have started as early as 2020, when it began paying yields to some old investors using the assets of new investors, according to another regulatory filing. The wrongdoings of Celsius were exposed after the Vermont Department of Financial Regulation requested information from the company's CFO. According to his claims, Celsius has never generated enough income to justify the yields that are promoted to its clients. What's alarming is the possibility that Celsius was bankrupt as early as 2019. Regulators claim that this is the case since, as of March 2019, the firm's liabilities exceed its assets, holdings of its Cell token accepted. In plain English, Celsius has used its native token over the years to support its balance sheet. According to a recent filing, the company and its management were able to manipulate the price of Cell by using investor money to buy more tokens, inflating their net position as a result. According to the lawsuit, Celsius raised and propped up the market price of Cell by boosting its net position in Cell by hundreds of millions of dollars, so falsely inflating the company's Cell holdings on its balance sheet and financial accounts. Excluding the company's net position in Cell, liabilities would have exceeded assets since at least February 28, 2019, the accusations claimed. At the expense of retail investors, these methods might also have benefited Celsius insiders.